Welcome back. This week, we received the first quarter GDP reading, and the number reported was a big disappointment at minus 1.4%. So, Todd, does this mean the recession has already started?
Yes. I mean, simple answer, it's yes. And I got to say, it's not looking good for the second quarter. If you think 1.4% was bad, it's going to get really ugly the second quarter, only because when you start looking at discretionary incomes right now, you see them evaporating with the stock market. People are not making as much. They can't keep up with inflation. And as a result, they're not spending money. And you know, Toby, you know that the majority of that GDP reading comes out of the consumer, out of the household budget, and it's not going to be there. I think this number, this second quarter, is going to be bad.
Well, I mean, bad. It's not sheepish, but look at just the reality. In the United States, we're part of a survey group that we survey households, and we have 60% of the households in the United States, the richest country in the world, are what's known as Alice households. They're asset light, they don't own stocks. They're income constrained because they get hourly wages, and they are employed, right? But yet the U.S. Fed says they're $400 to $600 away from being on the street because they don't have cash. And now those people are using credit cards. If you look at the credit card rates and usage, it was up ginormously in the first quarter of this year. And that reason was that the people didn't have the money and they're putting the gasoline and the food on the credit card. That is a downward spiral. Because once they max out there, they got no place to go. And that's when we really tighten up. So I agree with you that forget about the numbers right now. For all intents and purposes, after inflation, the United States is going to be and is probably in now a recession. And that's before we take interest rates up to the point
I know.
that mortgages are 6%.
Yes.
And auto loans are 11%. Are you kidding me?
I know.
All right. Gentlemen, I think we need to
Justin,
keep some
what are your
perspective
thoughts?
here. What one quarter does not a trend make. And let's remember, balance sheets are still strong. Consumers are spending. Apple reported blowout orders.
No.
You can't keep up with the demand. So yes, the gasoline is biting into consumers. Energy prices are high. Inflation is coming. It's making things more difficult. But again, let's remember, we came off of at least a decade of great numbers. Balance sheets are strong.
That's
There's lots of money in the
looking,
system.
Justin.
We are still relatively accommodative.
So technically speaking, if this continues for a second quarter, you are in a recession, but do you think that there are other extenuating circumstances that maybe that wouldn't hold true?
No. Well, absolutely. There's a lot to worry about here. Absolutely. Yeah. But let's again, keep perspective. My customers are long-term investors. So we're not going to get too worried about a quarter. We're going to look to the future. We're going to buy these great companies on massive discounted prices here. And we're going to be very successful on a 12 and 24-month basis. We're excited about the opportunity.
Well, you know, the buy the dip, I love that. So buy the dip worked because the Fed was making financial assets go up in value, so we would have the wealth effect, so the economy would keep going. And then we plumbed another $3 trillion into the pandemic. That lasted for 10 years, and that's almost 100% correlated with stock markets going up. We're now reversing that. Justin, why would you assume that now that we're taking money out, we're raising cost of funds, and we have sticky inflation? Rents don't go down, salaries don't go down, mortgages don't go down. We have sticky inflation, and then on top of it, we have the Cold War 2.0, where we're taking 550 million people in Europe, and we're trying to get new gas and new oil and new fertilizer, et cetera. Oh, and by the way, food.
Yeah.
Food is already the prices. We're long wheat and corn, and we're long fertilizer.
Yeah.
Because the prices have just shambled. We're going to have food riots like we had in Egypt.
Riots.
Years ago.
Chaos.
All over. So in that world, I agree with you that when everybody thinks the world, the market sucks, I want to be a buyer. But I want to be a buyer at appropriate valuations to the new 2.0 world we're in. And right now, I'm not going to buy a great stock at 35 times their earnings when rates and all this is going on. I want to buy them down like Warren Buffett would.
Too many headwinds.
So Todd,
I'm Buffett, back to the future.
The last recession, 2008, 2009, called the Great Recession. How long do you think this one would last?
Great question. I got to tell you, I think it's going to last well into 2023. I look at all the headwinds that are out there and also the geopolitical risks that are out there.
Yeah.
And you have so many headwinds right now, you cannot suspect that the United States economy is going to be able to recover at a rapid rate. And therefore, this recession is likely going to end up, it might even be considered Great Recession 2.0. And I think we really have to brace ourselves right now. It's best for investors to start taking cash, holding onto their money, looking for higher yielding savings accounts if they can, and just start stockpiling, because things are going to get ugly and it's going to get a little bit chaotic right now and very stressful.
Yeah, and let's not forget that go ahead.
I want to take another position on this, Todd, and suggest that I don't want to bet against the U.S. consumer. The consumer's always demonstrated an ability to find money to spend, to have the newest telephones, and do the things that they want to do. Balance sheets are strong, and they will find a way to buy the things that they want to buy. We also have all this money coming from cryptocurrencies and trading in this department here. I'm going to maintain there's a lot of money in this world, and it's going to find a new home.
Justin, is that the Titanic over your shoulder? It looks like the Titanic. That's the U.S. economy, baby. That's what's going to end up happening right now.
All right. Thanks, guys. Go ahead, real fast.
Todd, put your tongue back in your cheek, all right? Okay.
Okay, recession talk is just the latest variable to whipsaw the market. Coming up next, we're going to dig into corporate earnings and discuss whether the future is as dire as many quarterly reports are telling us.